We're joined by Abhishek Somany. He's Joint Managing Director of Somany Ceramics. Thank you so much for joining us, Mr. Somany. You know, everyone's heard of Somany Tiles and Somany Ceramics. A lot of interest right now because of the focus the government has on housing and rural housing. There's a great sense that that's going to pick up, and if that happens, the way for a lot of investors to play the markets or play that story is through companies which provide that kind of interiors. So how's the business looking like to you right now?
I think you're absolutely right. The rural market, so if I talk for myself, about 75% of our business now is coming from tier 2, tier 3 towns.
All right. Okay.
And I think that's going to only increase. There's not much scope. We're already at that higher percentage. But the rural market is looking up. And I think even in the builder segment, if you look around, what is selling currently is the low-income housing projects. And that's where the builders are trying to, churn their cash. The upper end of the projects are really not selling. So clearly, rural is going to be a big thrust. And with the PM announcing 2022 housing for all, I think that's going to be a huge impetus for the industry and especially companies like us.
And this entire new ordinance route for acquiring land, rural housing, housing for poor, you were saying that is something, there's a thrust area for you.
I'm not sure how much of tiles would go into for housing for poor, the really poor, because but it would go to the tier 2, tier 3, tier 4 towns.
Tier 3,
and I think what's happening is if you see corridors like the DMIC being built and the other infrastructure projects which are coming up in the next 5 years, all of that project. So let's talk of only one, which is Bombay Delhi, the corridor, the freight corridor coming up. I'm sure there'll be a lot many more satellite cities such as Bhiwadi or such as the ones in Gujarat, Rajasthan. They would come up on the corridor. So that's where we're looking at a larger part of the growth going forward.
So if I look at Somany Ceramics, the company itself, could you just break it up for us? What are the main lines of business? Of course, most people would know it because these are consumer-facing businesses in a certain sense. Right?
95% of our business comes from ceramic tiles.
Okay.
All kinds of tiles, which is vitrified tiles, ceramic tiles, industrial tiles. We also have a patent called Whalecraft. That's a 300 crore rupee brand within the company. So that's 95% of our business. We have recently started sanitary ware and fittings. Sanitary ware has come of age where we have now put up our own manufacturing. So we're fairly serious about that business. And fittings, we're still trading, but it's only a question of time we would put up manufacturing even for that. So that business would constitute over the next 5 years at least 10 to 12% of our revenue.
But right now it's just 5%. You're saying the
right now it's under 5%.
Under 5%.
That's right.
95% is tiles.
The ceramic tiles.
And how much is it from the domestic market, and do you export as well?
We export. We export about 3 to 4%. That's only started fairly recently, where the dollar rupee has helped us. It's anything beyond 55, 56. Exports become very, very
for you.
Absolutely. Apart from that, another huge plus point for our industry as a whole. China is faced with anti-dumping duty in the whole of Europe and most of South America. So all of those people are now making a beeline, where India is the next most competitive market. And China, rightly so. We're trying to put an anti-dumping on them even in India because they are clearly dumping.
So if I look at the tiles business right now, what is the size of the market currently and where do you see it going?
The size of the market is fairly healthy. It's about 22,000 crores as we speak this year, which is just a shade below the paint industry. So from that point of view, we're a fairly shy industry. We're not as much in the media. But that's the size of the industry, and it's been growing very healthily. For the last 6-7 years, we've seen growth of between 12 and 13%. And if this housing for all and all of what you've just spoken...
And this is volumes or value?
This is, equally broken up, but I'm talking of value-wise going up at that much. But to cater to that value, obviously we're putting in significant amount of volume. So in 6 years, I think 6 to 7 years, the industry has put in about 10,000 crores and above of investments to upgrade the machinery, upgrade the industry. We're at par with anybody else in the world.
So out of this 22,000 crores that you're saying, how much comes from almost entirely is organized?
No, it's 50-50.
50-50.
So volume-wise, 50-50. Value-wise, 60-40. 60 in favor of the unorganized.
60 in favor of the unorganized?
That's right.
So they produce more expensive tiles?
No. Value-wise. Sorry, volume-wise.
Volume-wise, yeah. Okay. So value-wise is 50-50. But volume-wise, it's 60. 60. And how much of that, in terms of the value, Which you said 50%. So that's about 11,000 crores.
Correct.
Does Somany Ceramics command?
So we are about, this year would be 1,500 crores odd. So that would be about 12 to 13%.
Does that place you clearly as the number one?
No, we're not number one. We're number two as far as tiles is concerned. And as far as the industry is concerned. But what is interesting is that in this 11,000 crores, 5-7 years ago, there were 5 or 6 players who would contribute 50% of the sale of this 11,000 crores, whatever the number was at that time. Now more than 55% is held by 3 players.
Okay.
So we're significantly getting market share within the organized sector and also within the industry.
But you said that 60% of the volume is unorganized sector. Does the entry into tier 2, tier 3 mean that you see organized sector taking up more and more of that market?
Yes, and I'll give you a reason as to why 60% of volume is there, because a lot of the large manufacturers such as ourselves have gone in for joint venture manufacturing, which is contract manufacturing. Therefore, increasingly we're putting in more capacity with
without
the organized
taking the costs.
Absolutely. So it's an asset-light model which is playing out very well. We're adding significant capacity at a fraction of the cost. The unorganized sector is becoming more organized.
So is it becoming more organized because a company like Somany is going and saying that, okay, you sell in this part, get into a joint venture with me and I'm going to market it through Somany. Is that the...
That's right. We underwrite the capacity. They are assured of their quantities and value. It's a single check they're getting. They are completely isolated from the receivables in the market. That's on us. Marketing cost in us. So we're in a way becoming a marketing company.
Well, that's interesting because effectively then your capex costs are very limited.
Absolutely.
Right? So what is your debt? Is it largely a debt-free company?
Virtually.
Okay. Well, I was reading somewhere that your working day, the work-day cycle, the number of working days, etc., has been affected a little bit in the past.
It's come down, in fact, positively. So we're working at
but that excludes the one-time cost that you have.
No, it includes that.
Including that.
It includes that.
Okay.
So we've definitely progressed on the working capital. A lot of current assets have been unlocked and put into investments. That's how we've been able to bring down our debt, coupled with this asset-light model.
How flexible is this capacity model that you have, in the sense that if, let's say, the capacity at current capacity, first let me get a utilization part of it, including all the organized and unorganized who are within that JV model, how much capacity utilization do you currently have?
We're about 90% capacity utilization.
All right.
And the breakup is we have about access to 55 million square meters at the end of this year, end of March, out of which 24 million will be produced within our own company. Another 20 million, in fact 18 million would be produced by joint venture manufacturers where we have an equity participation. And the balance 7 to 8 million would be without an equity. So it's a vanilla joint venture partner.
All right. Okay. Yeah. And is it flexible in the sense that if that market shrinks, you can get out of it if you want?
That's right.
But the joint venture equity, you will have to.
Absolutely. Equity is virtually our plant.
So are you adding more and more of these, which are these vanilla things, or are you going to be JV oriented?
It's a fair balance. So we're keeping the vanilla also alive. I think it's a fair balance between, so there's no right or wrong answer to this question.
Yeah, okay. But essentially you are being pretty flexible about the growth process, right?
That's the beauty of this model. So in case there are 2 quarters which are not very good, we're not taking a hit on raw material or on inventory because we have these partners with us, so, which they understand. So I think it's fairly flexible.
And what is the main raw material there?
Worldwide for tiles is ball clay and various other kinds of clays, which is abundantly available in India, specifically in Rajasthan, Gujarat and also Andhra.
And are you manufacturing units? Are they around those areas? Or
yes. We're not into, I thought you were asking whether we produce clay.
No, I'm saying are they close to the resources themselves?
Absolutely,
right.
Which it has to be, and worldwide it's the same. So if you see in Gujarat, we have virtually 90% of the industry is based in Gujarat, and the balance 10% is fragmented within the north of India, which is Rajasthan and Haryana and Andhra.
Okay. I want to get a sense of, of course, being flexible, you're kind of de-risked completely from any growth or degrowth. But at the beginning of the year, or let's say beginning of May, end of May, when this new government came into place, what was your sense in terms of growth prospects and how has it changed either on the downside or on the upside now?
That's a good question, because we were very excited with the new government coming in, which we still are. So in the long term, I think the right moves are being made. But in the short term, since let's say August up to now, we're seeing a serious disconnect between what is being talked around us and what's happening on ground. We've seen these times a huge amount of slowdown has happened in the construction sector. There seems to be just no money, whether it's the builders or the retail for that matter. So there is a slowdown. Fortunately for us, like I said, we're almost debt free. Therefore, we've been able to garner this position and get market share from some of our competitors. Had it not been for that, we'd be under trouble.
So effectively, although you are not directly rate sensitive, you still operate in a rate sensitive space, right?
Oh, absolutely.
How are you, I know it's a difficult thing for you to comment on, it's not directly your line, but how closely are you watching this kind of now open battle between the RBI and the government on interest rates?
I think mixed feelings. I think the RBI is doing the right movement, giving the right cues, where they're telling the government to control the inflation and not step in so rashly. I think they're playing the American model for that matter, where they're leaving enough lag for the downturn and the upturn. Who knows where the dollar, where the barrel would be 6 months down the line. So I think from that point of view, is doing a good job. But I think it's high time that some rate correction happen. All our buyers, when I mean our buyers, the housing buyers, are waiting on the fence, looking at some cues. Hopefully they'll come back to buy these flats. Until then, it's clearly worrying times.
The huge inventory, is it a cause for worry?
Yes, it is. It's a huge inventory across. Like I said, tier 2, tier 3 is slightly less. To that extent, Karnataka, specifically Bangalore, is doing well. So there are pockets which are still doing well.
But even Bangalore, you know, in the listed space, we look at some companies like, let's say, Shobha or something like that, where the growth prospect has kind of petered down a little bit.
That's right. That's right. I think growth prospects have petered down across. We were looking at, we are going to still meet our targets, but we could have done better. When the government changed, your question, we were looking at a better, we were enhancing our targets, but we held back.
All right, very interesting. Thank you so much for coming in, sir.
Thank you.
Pleasure talking to you, and congratulations on coming up with this very flexible model in tough times. Right? I understand you're a car enthusiast as well, right? And,
yes.
So is there anything new that you're looking at?
Yes, so I think tiles is just by the way. That's my first interest.
All right, thanks a lot.
Thank you.
Pleasure having you on the show. Okay, very quick break right now, and then we'll have Atul Kohli joining us right after this very short break. He's from Tata Mutual Funds. He's already there in our Mumbai studio. Atul Bhole, fund manager at Tata Mutual Fund. Thank you.